financial advisors from many, many years back. And it's a do-it-yourself self-evaluation. And people like that because they could sit with this sheet in front of them, and in 5 minutes, they're able to, determine what is very important to them. And it helps us, or it'll help you determine where to start with them. Let's just get the low-hanging fruit and let's take care of the areas that are important to them, and then we'll move from there. So I've used this effectively through the years. Works great when you have many people, let's say at a workshop or educational event. But even if you forward this to somebody and you email it to them and say, hey, before we get started, just let's take a look at where you are and where you want to go. So these are like 7 or 8, tenets of financial planning. We start with goal planning, investment planning, retirement. These are yes, no questions. And if they're not sure, they just circle not sure. But this helps us determine, again, what is important to them. And here is the insurance section. Have you had an objective review of all your insurances? Do you feel you have the right amount of life insurance? Do you feel you're paying too much for your insurance? Do you have temporary insurance or term insurance? And believe it or not, many people don't know exactly what plans they have and what policies they have. Are you relying on your employer to protect you, and would you like your insurances to be checked for lower costs? And almost everybody checks yes or circles it. And, right there, they're telling you they would. So just, go forward with it. And, you said you wanted it, so we're giving it to you. We're going to check all of your insurances. So please provide your deck pages, or please provide your even deck page for your life insurance policy. That's another phrase people don't use, a deck page for a life insurance policy. If they own a business, there's business planning questions. And here's estate planning questions. Do you have a valid recently written will? This almost all the time will be no. Do you think you need a trust? Most people are unsure. And that's where we could step in and provide the guidance and the knowledge regarding trust or will, what the difference is, what is probate, and so on. Do you wish to pass your estate intact to your beneficiaries? Are you a trustee or an administrator of an estate? People may be, and they don't even know they are. And that's another area to talk about. So, and then finally, are they satisfied with services of their accountant? And are you satisfied with the services of your attorney? And lastly, educational planning. Is it important for you to save for your child's education? Do you have the funds to meet the objectives? Are you paying off a student loan? And then yes or no. Yes, I'm interested in a free comprehensive consultation. They can return it to you or just give it to you. This takes less than 5 minutes for a person to fill out. So I've used it. I suggest, if you want it, I'll send you a copy of it. Send it out if you're engaging with someone. Oh, by the way, if you're a P&C agent, oh, by the way, I can handle, other areas of insurance. If you're dealing with somebody's property, it's good for them to know that you can handle, many areas of insurance planning, including life insurance. The other forms that I've used very, strategically, and that is to get to learn about what they have. And so these are just sheets that I'm going to share before we discuss, client engagement, conversation. But here's a personal balance sheet. Again, just email me or text me if you want it. I'll send it to you. This was put together. I put it together many years ago, and I just send it to people to provide due diligence and suitability and to make sure that we know about our client, even if it's just a simple term insurance policy. Even if they tell you that they know what they want $500,000 of insurance, there is some suitability here to make sure that we're providing the right amount of insurance, or maybe we're providing too much. So it's important to get an understanding of where they sit financially. And they can complete this checklist here and put in the information, and it helps us determine what their values are. What is their net worth? What is their liabilities? What is their future current retirement income anticipated to be? And this separates you from, an ordinary agent because you're doing forward thinking, and that's key. Most agents are just there, to serve and solve the immediate need. And while that's good, we leave a lot of money on the table. So to give you an idea that I really do use it, here is a person that, I just found one and picked it out, and here it is. And he put it in here. And you can take a look at the mortgage amount. You'll know about that. You'll know about what they have in their 401k, and that'll open another opportunity for discussion about what to do with that money, how to better use it. Maybe an annuity is suitable. Maybe it is not. Maybe a 401k is the best place. Maybe it isn't. And then we'll know what their net worth is, and we'll know, a little bit more about them. So this is a great balance sheet that everybody should have. And really, I think even people who get mortgages and are buying a house should have this completed. I know that you fill out a 1003 Fannie Mae, mortgage application or whatever it is nowadays, but, they don't have possession of that, and they really don't see all the things that are listed on this page. This is very, very helpful. This is very, very helpful for us. So use this sheet. It's a very good sheet. I thought we would do a client engagement, and, when you meet someone from start to finish, how do you move forward? You take them through a process. And I'll use maybe some of the steps and some of the language that I've used. You have your own, and, you get comfortable with a way or a method. But, let's suppose that you find a prospect who you believe has a need for insurance. And in this case, she's 45, she's female, and it's always a good idea to get the date of birth. Why? If they tell you they're 45, well, what you need to know is some insurance companies use age last and some use age nearest. And so if their birth date is, if their birthday is coming up fairly soon or within 6 months, they're going to be advanced age, which will change the quote. And a birth date is an excellent. I thought of this the other day and said, man, I'm missing 100. I mean, just think, why don't I, or you, or anyone, just, oh, by the way, congratulations, you have a birthday, I'm in insurance, I know I send you a lot of stuff. Doctors, they need to have that. They need to be able to provide you with a current doctor or doctors, physicians, and be able to, readily have that information available down the road. Lots of times people may say to you, I don't have a doctor, haven't seen a doctor. And that, while that sounds great, it could be, but you need to be aware of the fact that some insurance companies and underwriters while they may be okay with no doctor, they're going to check an MIB or a medical information bureau. So they'll determine whether or not anything shows up medically, whether they've been to a hospital or, any emergency, treatment might show up. But if none shows up, some companies will not even allow you or allow the client to have the best rating. They may not allow them to get a super preferred rate without a doctor. I've seen that, although I haven't seen it much lately, but I have seen that. So the companies will offer and be, more lenient if a person does have a doctor that they have been seeing and there is some information available. Which, by the way, you also should know there are some companies now that have lifestyle credits that if the client can show them or prove to them or maintain some level of, physical fitness activity, they'll actually apply credits, numeric crediting to the underwriting, which can really boost a person up above a standard normal rate to a more preferred status. So that's important to know also. So if you have somebody who may have some medical conditions, but they go to the gym regularly, I think that's to their advantage. Make sure that you write, a note about that to the underwriter, which brings, us to cover letters. Cover letters are very important. Believe it or not, sometimes they should be used, in cases where there's some vagueness about the medical condition, but it helps to paint the picture of who the person is that you're insuring. Don't forget, underwriters live, in a cubicle somewhere. They just know a person's personal data. They never got to see the person. You are their eyes, and you are their ability to learn everything about the person, which helps them, and they really do appreciate that. So cover letters are important to describe the medical condition from your knowledge of what you've learned. So the next step, that's a lot about medical. That was just step one. Step two, make sure you have secured the ability for that person to pay. Learn from where the income sources are coming from and the method of payment. Do they want to pay it annually? Do they want to write the check once a year? They'll get a discount, sometimes best that way. Or do they want to do an EFT monthly draft on a monthly basis? You pay a little bit more, maybe equivalent to one more extra month perhaps. But, sometimes for funding permanent plans, monthly payments really don't, maximize cash growth as annual would, depending on whether or not we put it in a holding tank and then make installment payments from that. Number three, discuss the difference between owning or renting coverage. Now, Lucy said, she wants term insurance and she heard that's what she should have. And why? Well, maybe it's because that's the only thing she really ever knew. But it's always good to give a quick rundown on what term insurance is and does and what it doesn't do, which is last 1 minute beyond the expiry date of the policy. Don't forget, term insurance can keep you in business, repetitively, because as the term date nears, people start to get a little edgy, fidgety, and they feel like they need to replace it because they know they put all that money in and it's coming to an end. So thankfully, term does some great retention of the client for us and provides us with another opportunity to show them and sell them another appropriate policy. And you get paid for that, right? So it's good to make sure they understand that and what maybe an option could be, or maybe a mix would work well. Maybe two policies, maybe a term insurance policy and a permanent policy. One that would provide a large amount of money, and the other might be a subsequent policy that will remain in place for the time the large term insurance comes to an end. And a lot of people do appreciate and like that. It shows that you're really thinking for them ahead of time and going to prevent, a total lapse or loss of coverage. So, one thing I've learned, and maybe some of you have as well, is insurance is really not like a very sexy word. How do you deliver that message to people without saying the word insurance? Well, people like money. People understand what money is, what it does, what it means to have and to not have it. And when you explain, or at least when I explain, that we provide a bucket of money, and I call it that bucket of money principle, that they buy it at a huge discount compared to using their own money or borrowing money or not having any at all, at a discount, which is paid at the precise time that they need the money to come out of that bucket. So if you provide a bucket of $500,000 and that money is going to be used for living benefits and death benefit, they understand that, hey, I have this bucket of money at my availability. It's sitting there, or you could even say it's sitting in a balloon up in the sky. And what you're going to do is you're going to just put a hole in the balloon and let some of this money out whatever way you want to describe it, we're still talking about insurance and having them insured. So what I have here is that life insurance, pays upon death. You need to also, explain to them that, there's another way that this money can come back to them in the form of living benefits. And these are some of the latest and the greatest, concepts that are out today, are products that are paying not only a death benefit, but a living benefit in the event of a critical illness, critical care, at-home care, long-term care services. And that would supply them with a lump sum of money or a monthly payout. And that's very, very important, because that money can help them continue to pay their premiums, and also, pay their premiums not only on their life insurance, but pay their premiums on their health insurance policy as well, plus their other standard of living and lifestyle. So it's very important to cover the living benefits with them. Number 5, find out if they have any personally owned life insurance in force. This is important because if they do, you need to obtain the policy information, the policy number, the company it's with, the amount, and the type of policy, because you'll need to supply what's called replacement forms along with the application. I think I'm breaking up. Somebody's telling me here, I think that I'm breaking up, but I don't know why that would be. But I'll just continue on. Very important. Number 6. I said, in my email or announcement, learn how to make multiple sales. We miss a big part of that here. It's right here. Number 6. Ask about her beneficiaries. How much is she intending to leave percentage-wise to each? If you remember up above earlier on, she had said that she has 3 children and one of them is 16. Well, she might say, I want to leave it equally. And that's what most people say. They want to leave it equally, to their children. But you need to tell them that, the insurance company is not going to pay, money out to a minor. I've seen cases where insurance companies held it indefinitely until a guardian was appointed, or, someone else stepped up with the power to make the insurance company aware of the fact that they legally now can pay this other person. Believe me, you don't want to have to get involved in that, because it's a big time waster, and the client, or the family member is getting very upset, and it doesn't do any good. So the best thing to do is to be straight right up front and say, you can have beneficiaries at, age of majority, but the minor, cannot receive the money. So how do you want to handle that? So, the way to handle that is, well, maybe a trust is right, for this person. Do they have a will? So it brings us back to another opportunity to show that we know what we're talking about regarding estate planning and life planning. And you can help them with that. You can help them with a will. You can help them, establish a trust. We have the programs available, whether we use NetLaw or use another service, whether we use our Vault system, which we'll talk a little bit more about that, through Legacy Armor. There's all ways that we can help people. But make sure we do the right thing with the beneficiary. So here's a key question. So she said her son, is married here with 1 child. Well, that's great to know, because you may at that point want to ask her if she thinks her son should be, put something similar in place. Well, what about your son? Do you think that he's married? Does he have children? Do you think you would be open-minded to consider protecting him and his family? That would be less of a burden on you, right? If something tragically did happen. And, oh, by the way, there's no reason why you could not, make the payment on his behalf. as the premium payer. So, there's many ways to skin the cat in that regard. So ask, would it be okay if that I called him to let him know, that he's the beneficiary, and along with the other responsibilities he now has. That's critical. It's really unbelievable that if you think about it, somebody has $1 million policy in place. They put it on their life, and it's been in force for 20 years. And they chose a beneficiary at time of application, and they never told anyone about it. They just never told anyone that they're a beneficiary. And think about that for a minute. Just, they had no idea. And if the insurance company cannot find that beneficiary, how long is it going to be before that $1 million gets paid out? This is real stuff I'm talking about. This happens regularly. So I believe that if we get in touch with the beneficiary and let them know what their obligations are, and I said responsibilities, but it's really their obligation, that they have duties, and some of those duties are to stay in touch with you as the advisor, or even make their information somewhat known, whether it's through a trust, as I said earlier. It's important. And then you have a chance also to write business on the beneficiary, and that's the key. They may have 2 children, 3 children, whoever it may be, a brother, a sister, the mother, father could be a beneficiary. Reach out to the beneficiary, let them know who you are, what you're doing, and that their family suggested you give them a call. And I said this, many times, enthusiasm really sells. Okay, so if you're able to be enthusiastic about all the great things you're doing for them, they will logically see it, and they will, engage with you, and they will get it, because the reality is everybody really does want the same things in life. So, so everybody falls into the prospect bucket, if you will, in that case. So that took care of beneficiary, and it's important because there's a lot to discuss when we talk about beneficiaries. Most times people just write the beneficiary down. Okay, John Doe's the beneficiary, 100%. Okay, thanks very much. I did my job. I'm going to get the application in. No, it shouldn't be like that at all. Pardon me 1 second. So enough about that. Number 7, ask if she has the capabilities to scan or email documents. Okay, let the people know. Let them know what the procedure is. What's the process? Let them know that an application that you're going to take with them can be handled a number of ways. For example, we can scan over the signature pages. You could do that. Take all the personal data over the phone, right? Speak to them by phone. Get all the personal data. You'll get it from an application, so you'll see what all the questions are. And then just ask if she can email the signature pages back, okay? And once we get it, we can include it in the application and send it to the carrier. That's one way. The second way is you can mail her the application pages, for the signature pages of the application, and have her return it by mail to you. I've done that many times. Just takes a little longer, but it works. We can also conduct a screen share of the application, and she could sign, either live with you on the screen share, or you could send a DocuSign email that'll be sent to her from the carrier for her electronic signature. We also can take all of the application questions from her in advance, and we could perform the e-app ourselves. So get all the information from the client, start filling out the application on a piece of paper, or transpose it later into the e-app, and then have them DocuSign, email, electronic signatures, and then we will upload that into the electronic application all of her data, and then go from there, send it right to the carrier. And then finally, there's always the face-to-face meeting. Just drive there, or have them meet you, and then just do a paper application. Or you still could do an e-application over the computer with a laptop, if you want to. So those were the steps and some of the language that we should take. There's obviously a lot more, but the next step would be, okay, well, I have all this information. I kind of sized up, my client. I kind of think I know medically, what we're going to do. This step 8 really is probably in the wrong spot. But what this says is now go to work and obtain the policy type. What type of policy do you want? And can you close the door, please? What type of policy do you want, whether it's term or UL or whatever it is? If term is desired, you could send them to our IQS, quote, term quote screen, or there are many other places to go, and we could, I could share that with you at another time. So it's very easy to go get a term quote and understand what that is. You could just let them know, hey, for $500,000, it's $125 a month for 20 years or 25 years. I kind of know everything about you already. The next step is to really just grab this, data from you and put it onto paper or do it electronically. Contact the client, like I just said, tell them what the price is, tell them what the best, that this is the best program or best insurance policy for them. Get them the information so that they can evaluate it, and then set the time to actually do the e-application together, or use one of the methods that I just said a little bit earlier. Okay, so that's kind of how you move a person from square one beginning right through. Okay, I kind of know about them medically. I kind of know the amount that they want. They gave me a little bit of information about themselves. I feel confident that they can qualify medically. They're not going to get declined. If I need help, I can call Sal or another associate, to bounce it off of. And then, okay, so in this case, let's use emeritus flex term, which I've been sharing with a lot of people. The success I've had, I've been writing good business with them. I find their underwriting to be outstanding. They're fast and very liberal. And in many cases, I've seen them come back with super preferred, and it's like, really? Okay, let's do it again. So they also offer living benefits, policies for term and their IUL. Their term is, 10, 15, 20, 25, 30, with 18 critical illness triggers, one of the best out there in the market. Their rates are very good. It's a very good company, old type company that I like doing business with. Their IUL product is a great product. It offers a 170% participation rate on one of their index strategies. So we can go right to, and I probably have to, log in here if I can. See if I can do this. I might not be able to. 1 second. Let's take a look here. Let's go to Emeritus. And so here's their back office page. Once you are, contracted with them, you have a license, and you get appointed to do business with them, you'll be able to get into their producer workbench. This is what it looks like. By the way, their flex products are really used. I'm not sure how many, IMOs, agents of IMOs have it. Not many, but, the IMO that we're with offers their flex products. And I believe for their regular career agents, don't even have access to it. So just keep that in mind, their IUL and their term product. So you can see here, when you get into their what's called a portal, you can then, go to the FLX e-app right here, you would click it, and this is where you would go to begin the application, and it walks you step by step in putting an application in. To construct, you go to their illustration screen, and we'll wait for this to come up. Of course, I have to put a new, that's my little thing. And let's log in and see if it takes it. It did. Let's see. Did somebody text me? Okay. So this is where we'll go to produce an illustration. We have to do it again because I had to log in. We'll go right here to Launch Life Designs Now. Your name and code number will pop up. We will put a, we'll put a new case in here. We're going to start with a new case. We're going to put Lucy. And we're going to put age 45 because I really don't have her birth date. And then we're going to come to return. We're going to go to cases for Lucy. We're going to do a new illustration. And we have a choice. We can use their flex living benefits or the whole life and term. And so we're going to use the term because that's the only product that we have for them. And that's okay. The term product is fine. We'll look at a 25 year policy. We'll use a preferred non-tobacco. We'll use a $250,000 face amount. We'll keep it in an annual mode. The choices are annual, semi, quarterly, monthly. And let's see, that should be everything we need. We hit preview, and it's going to calculate and present an illustration. And so here's the illustration right here for Lucy. And it talks to her a little bit about the chronic and critical illness payouts that are here at assumed ages, okay, what would be paid out. And right here is a list of the critical care, the triggering events that we talked about earlier. Right here, this is a this is on just a person that's has nothing to do with the actual person that we put in. It's just like a summary. Like they're talking about this person, Chris, and he's age 50. This is how it works. It's kind of a description. And then as you go through it, it talks a little bit more about what the risk class is, the initial face amount, which is always going to be the same because you cannot change the face amount on a term insurance policy. So it'll always be the same. You can convert a term insurance policy into a permanent design. And that's, for another day, we could talk about that. The premium is $850 a year for 25 years. For some reason, I put male here, but you get the point. I should have changed it to female. And okay, some of you people want it to be female. So let me go. We'll just leave it at now. We'll leave it at now. So you get it. So that's the illustration. By the way, with an illustration for term insurance, there is no client signature. Okay. This is the premium breakdowns right here. You can see them. Annual payment, stroke the check payment, $850 once, or pay it monthly for $73.05. It's very reasonable. It really is for a 45-year-old male, which is more expensive than a female, and includes all the living benefit, cash payment trigger, for all of those, things that can happen to a person. Okay. And, out of these modes, the two worst modes are to select. When I say worst, they really are not the best for us to have a client use. They're right here in the middle. They're semi-annual and quarterly. Actually, quarterly historically is the mode that offers the worst lapse rate for insurance companies. So, try not to have it quarterly, because that quarterly bill comes every 3 months, forever and ever. People can forget it. And so people lapse their policies easier with quarterly than they do semi-annually. Monthly has got the highest retention, followed by annual, but they're both very strong. And it's important, that you maintain a relationship with them on the billing or the mode method, because that gives you more opportunities to stay in touch with them. So from this point, since they do not need to sign any illustration for term insurance, really, all you need to do is talk to them a little bit about what the living benefits are about. Maybe you want to send them the living benefit consumer guide PDF, not necessarily the illustration. There's no big reason to send them an illustration. They get one anyway when they get the policy. There will be an illustration attached. The copy of their application will also be attached. So it's not like, you need to get this in their hands for them to examine anything. It's pretty straightforward. Premium $75 a month. The face amount is $250. It'll run for 25 years, and you're off and running. And, just set up the appointment for the application. Okay? So I hope you found that helpful. And if you need some guidance on how to get forward with a particular client, give me a call, and I'll help you, get moving with them and teach you or show you where you need to go. I believe less is more. I believe that, you don't need to be doing business with 20 different insurance companies. If you find one that you like and they're doing well for you and you're not in a very competitive situation, then, by all means, continue using that company. Obviously, if you're in a different situation where you're in a competitive situation, this company may not be appropriate. And that's where experience comes in. And we have loads of experience, believe me, in our team. So I'm going to say thank you. I'm going to stop sharing and then see if anybody has any questions.